Morning all, how are we doing? Morning ladder. So I've just sat down, I haven't even launched my terminal yet. I will be with you in a minute. Morning Diamond. It's Thursday. So seeing as my terminal is still kicking in, excuse me, we'll start with the news. There is no news today until GDP this afternoon. So 1:30 this afternoon, we've got GDP, then we've got home sales, which you can kind of disregard. So literally it's a clear sheet today apart from GDP and unemployment claims. So that's 1:30, an hour before market open. Quick scan through, see if there's anything exciting happened overnight. Reasonable to maintain an existing monetary easing. Okay, so it's fine. Natural gas prices fall. So a couple of things to consider today. Oh, wrong one. We had earnings last night from IBM, from Tesla, sorry. And IBM. IBM is a part of the S&P 500. Tesla is part of the NASDAQ. The Tesla is top 10 stock in the NASDAQ. They smashed targets. So did IBM. So potentially this afternoon, when the bell goes NASDAQ, we could see a fairly decent pop. I'm telling us up now. I have been watching the NAS this morning, and we are, we're opening a little stronger. The Globex session, you don't tend to get a massive movement in, but I would expect at the opening bell to get some decent movement. We had this rally last night. So the opening range breakout yesterday, I'll have to draw it on because it's reset. So I posted it in Telegram, but that was the ORB yesterday. There and there. So took it short, stopped out, pretty much break even. I think I lost $30 on that. Then caught that yesterday. That was a beautiful ORB yesterday, 200-point move. So yeah, lovely ORB yesterday. But I suspect a lot of that was caused by speculative buying based on IBM and Tesla figures. You can't keep this secret, this stuff. It's when it's released. Obviously, everybody knows about it, but obviously, people within organizations know what these figures are going to be. So it's very hard to keep it all very hush hush. You're never going to get, I don't think, the exact figures released, but it only takes one account to go, yeah, we've had a good year, we've had a good quarter. Sales are up, as from what I saw on my spreadsheet in December. No idea if we made a profit or not, but if sales are up, you're up. 1.8 million cars they're going to be selling a year, which is they turned over 23 billion in 3 months. That's a lot. So yeah, good figures there. Pre-market, we got Blackstone and MasterCard today, and then aftermarket, we've got Intel and Visa, and then American Express and pre-market tomorrow. So Intel this evening is the big one. So we'll keep an eye on those. So yeah, apart from that, so there's all the news basically. IBM have also said they're going to cut 3,900 jobs. Not good. This is the issue I think we're having at the moment with the US dollar. Is the unemployment is the problem with the US dollar. They are seeing, I think, a lot of redundancies starting to kick in from a lot of these big organizations who expanded rapidly during the COVID years. And now they're feeling the pinch. I say feeling the pinch. Oh, damn, we're only making 20 billion a year instead of 25 billion a year. What should we do? I don't know, sack 3,000 people. Oh, that'll save us $1 billion. That's kind of the view, isn't it? But from an economic perspective, obviously, it causes a big problem. So, yeah. Yeah, those figures that came out last night. That's about it. So no other news. So 1:30 this afternoon is what we need to pay attention to, which is GDP. We had the overnight rate on the CAD. So the CAD basically, I'm going to combine sentiment. I want to go to fundamentals. So obviously CAD is 4.5 now, 0.25% increase. Inflation is still down. So we are now at I don't think it could be terminal rate for the CAD. Don't know. 4.5 is high. We're now on a par with the US dollar. New Zealand obviously is in second place, and then the rest are all running up behind. So obviously you can see the larger inflation figures, and this is a really good. This gives you a really good indication of the relationship between inflation and interest rates. Yeah, look at the people who are hiking the interest rates the quickest, and look at their inflation. Look at the people who are not hiking the rates. Look at their inflation. Yeah. So this is the relationship between inflation and interest rates. These guys got on the board a lot faster than everybody else. They're getting on top of inflation faster. So to keep a recession at bay, you need to keep that inflation down, which is why the market has been negatively reacting to a lot of these 0.25%, 0.5% when inflation's been so high, especially with the pound. We are massively far behind on everything at the moment. Not good. And euro, at least they have come out and said, yeah, we are cracking the whip, 0.5% guaranteed for the next 2 months. So we're going up 1% by March, end of March, and we'll keep going from there. So, but their inflation is coming down at the fastest rate out of all the G8. So, inflation is actually coming down faster for them, even though they haven't managed to get the interest rates up. So, yeah, so that's from a fundamental perspective. You look at the bias scorecard, not made a massive difference to the CADs. New Zealand dollar CAD is still a buy. US dollar CAD is still a buy. So I don't think this is going to strengthen the CAD a lot, but we will see. Let's get rid of that. So DAX this morning, 1 minute to the open. DAX has had a fair old drop. Why have I not got the period separators on? Fair old drop this morning. Pre-market. So we'll see what happens with that today. But I'll be playing the opening range break on that one again this morning. Pound US dollar, I've just taken another position on that. So yesterday I banked just over 1%, sitting in 1.18 at the moment. All this has just been flip-flopping around, literally doing nothing. So it's all just doing what it's doing. I just need to quickly check something. Pound New Zealand is not a sell now. So I just want to make sure I've got the EA turned off on Pound New Zealand because I don't want to get in it. Yeah. So Aussie New Zealand. Let me just quickly take a screenshot of these just to remind me what I'm doing. New Zealand, CAD Swiss, Euro Pound, Pound US Dollar, New Zealand Dollar Yen. So New Zealand CAD is the one I'm waiting to get in long on, and Euro Swiss I'm waiting to get in long on as well. So those are the only two that I'm not actually in from my list. And looking at those basically from the bias scorecard perspective, obviously, Aussie New Zealand is a sell. Euro Swiss is a buy. Euro Pound. Where's Euro Pound gone? That's dribbled out, hasn't it? Have a look at that one in a minute. New Zealand Dollar CAD is a nice buy. US Dollar CAD, nice buy. Pound US Dollar is a nice sell. And CAD Swiss. So CAD Swiss was a sentiment trade. So I need to look at that Euro Pound. I might adjust this. Let's have a look at what the Euro Pound is now. So it's dropped back down to range bound. The reason for that being is we lost the sentiment. So we had retail sentiment long Euro Pound. Basically, they were all short it, so we needed to long it. So that has shifted. Some bloke going past on a lawnmower motorbike. Oh, I haven't got euro pound in there. I'll have to add that. Schmitz in the euros. Morning, Henry. Morning, Stevie. Morning, Freeman. So there you go. Euro pound. You see, they were obviously the market was all long on it, meaning we should be shorting, and now it's all short. Dropped quite considerably, that one, isn't it? There's a big drop there on the euro Swiss. Boom. Right. So, do you like my new icons, by the way? I came up with some icons just to make my navigation look a bit prettier. Right. So yeah, that's what I've got on at the moment. Do I want to keep the euro pound? I've got the euro pound on, so I've got to keep the EA running, but I'll probably take that off when that's finished playing out, that one. Right, DAX is dropping at the moment. So pre-market range, as Ladder has just said, very tight. So if you are trading the 15-minute pre-market range, which is one of the set files for the opening range breakout EA, you are short. So this is quite a good strategy, this pre-market range, because you get a breakout of a tight range with a tight stop. And obviously, as you can see here, you've got basically a 1.5 to 1 risk reward trade done. You're in, you're out, you're done. Literally the first 5 minutes. So it's a nice little strategy for a tight scalp, but you need a tight range beforehand. Also, the other thing you can do with this is take the 5-minute range break. But the problem with that one is, as you can see here, you get whipsawed. So the 15-minute range break today, there, you got whipsawed long, stopped out short, and then you made money on the short. So it's a way to make a little bit of money at the open quite often. But obviously it's a scalp with a tight stop, so therefore you're going to get stopped out on a lot. So you need to be prepared for that. Not one for the faint-hearted. So we'll see where this one goes today. Looking at the DAX for the last few days, obviously we've had a very nice rally. It looked like we were going to start a pullback. And then we got an inside bar. And then we got a double top. And then we got a triple top. Then we got a quadruple top. And this morning we've pushed up and we've come back down. So we are unable to break this high. So for those, let me open a new chart that's blank just to explain it a little bit clearer. For those that may have remembered control candle theory, I have explained it in the live room before, but that is our control candle at the moment. So the idea behind control candle theory, and this works on any time frame as well, is when you get a large candle and then you get an inside bar, you use this candle as a control candle. And the control candle basically its job is to keep price within a range. So this is what we call a balance. If you look at this over a period of the 5 days on an hourly chart, you will see a range. Yeah. So since we came down, yeah, all we've done is we've ranged inside there. So until this control candle has a break on the daily chart, we would assume that every range break at the high is going to reject. So we're just going to get false breakout after false breakout after false breakout. At some point, obviously, it is going to break. Yeah, that is when we start to get on the move. Yeah, so at the moment, we're sitting within this control candle. It's very, very, very bullish, as you can see. Wicks to the downside, wicks to the downside, wicks to the downside. It's massively bullish, but it's still not able to break this level, which says there are a lot of sellers here. We know that, because we've had a 12-day push and what we thought was the start of a profit take, but it hasn't happened. So there's a real battle going on the DAX at the moment. Very difficult to tell who's going to win this one. But at the moment, the bulls are firmly in control, but there's not enough of them. So we're either going to get one of two things. We're going to get the mother of all down days, and we're going to break that, and then we're going to collapse, and we're actually going to get that profit take move started, or we're just going to get an accumulation break and we're going to remain bullish. So difficult to tell, but this level here, this 15,138, which is exactly where we are right now, is where I would expect this high to currently be. So potential for a down day again today, which is obviously doing right now. So if you're taking the 5-minute opening range break, you're short right now with the stop somewhere up in that propulsion gap there. So yeah, it's very difficult to tell what's going on with the DAX at the moment. The other indices, FTSE's, it looks like it's starting to do a little bit of a bear run, but again, it's still not very convincing. There's a lot of buyers in the market at the moment. NASDAQ, very much the same. Push, a little bit of a profit take. We've had a lovely push on the NAS. You can't really compare the NAS, the Dow, and the S&P at the moment, though, because we're in earnings fortnight. So these things are just going to do what the hell they want to based on earnings. It's got nothing to do with anything else at the minute. If earnings are good, the stocks are going up. End of story. So as we should see today with the NASDAQ. So you can see we've got quite strong divergence at the moment on the NASDAQ. NASDAQ is pushing up. The DAX is pushing down. Yeah, interesting week this week. We really need to get that push to the downside, I think, on this DAX, but not able to get started. So I think we're going to get some big days over the coming week on all the indices, because obviously of earnings fortnight, we get a lot of pre-market purchases on sector purchases, and we get a lot of individual stock purchases. And when you've got someone like Tesla, and if you look at the NASDAQ, Tesla is the 7th largest stock on the NASDAQ, carries a lot of weight. The top 10 stocks within the NASDAQ carry, I can't remember the exact percentage. It's something like 40 to 50% of the weight of the entire index is carried by the top 10 stocks, because they are that big. So when you get one like that, or Meta, if you have Meta has a massive miss, for example, that will really kill the NASDAQ. Although there's a lot of other companies which might be performing well in here, it's the percentage of stock purchase basically that goes on within these. Like Nvidia is the largest traded stock on the NASDAQ. Yeah, it's not the biggest, but it is the most volatile and the most liquid. So everybody trades the NASDAQ, the Nvidia. A lot of people trade Tesla as well. And Netflix as well. There's a lot of Qualcomm's traded an awful lot. So if you watch stock traders, if there's any stock traders trading on YouTube, you'll find most of them will be trading Nvidia, because that's where the money goes. And Tesla is a similar sort of stock. So we'll see what happens with the indices today. Certainly a little bit bullish at the open. So just to quickly run through yesterday's trades. Shall I run through yesterday's trades? Do I need to go through them all? Not really. NASDAQ kind of broke. I broke even on the NASDAQ yesterday because I didn't get the whole move, but because it's too late in the day for me. I wasn't concentrating. So yeah, I banked a load of stuff yesterday. Most of it CAD. So those CADs, just to quickly whiz through them. There's no ADRs today, by the way. So we'll skip the ADRs because there's none. And we haven't got many RSIs, but we will have a look at those in a minute. So the main news yesterday was obviously the CAD. So I was on CAD Swiss yesterday. So I made some nice trades on the CAD Swiss. No, that one there. So what I was looking at yesterday, the reason I got out of these yesterday and got stopped out by the broker spread there, which should have been a $700 win and turned into a $200 win. What I'm looking for today is potentially a fade on this. So I get the feeling the market reaction yesterday to what was said was not strong. Henry, did you know this guy has a great website? You need to look around. Yeah. Thank you. Yes, I don't think the CAD is going to be that strong moving forward, just because of this reaction and the fact that we didn't get any strength off the back of it. So the market basically did not like the interest rate rise. And from what I saw in the meeting minutes and from what was said afterwards in the press conference, there was nothing particularly bearish about the CAD. But it's like the US dollar. It doesn't seem to matter at the moment with the CAD what news comes out, positive or negative. The market's just not interested. So these high interest rate currencies, I think they've stagnated. So I think when we're looking at sentiment and things like that, my view on the US dollar is kind of that to that. And I think now I'm pretty much the same on the CAD. I'm not bullish on it, although the market is, as you know, we say it's CAD. They are actually short on it at the moment, but they're long on the US dollar. So I think I'm going to stay in line with obviously COT, but with the US dollar, I'm not. So this positioning here, although the fundamentals kind of cancel out the COT positioning, I think the thing to do with the CAD now is to watch the combined sentiment and look for any pairs on the CAD which are able to take you short. So there's none that really, there's no overall COT bias short on this at the moment, although that can obviously change. It changes every week. Just looking at all the CADs. Yeah, I mean, we've got New Zealand long bias and CAD short bias, so that's full short, full long. The yen is short. Yeah, there's no combined bias basically that can give us any short opportunities on the CAD. So the best thing at the moment is US dollar CAD long. So waiting for sentiment to get on the wrong side, retail sentiment to get on the wrong side with US dollar CAD, I think is probably the best thing to trade at the moment, which is what I'm currently waiting to get on. So the EA is sitting here with US dollar CAD. I'm waiting for an H1 extension to the downside to get in on the next 5-minute reverse alert long. That's the only thing really I can see on the CAD that is worth trading at the moment. So with all these CAD pairs, there is potential for a fade today. Obviously I was expecting that to happen yesterday off the press conference. We didn't get it. So that one's done it. Let's have a look at all the others. Yeah, so Euro CAD is a short potential today. Pound CAD, again, another short. So just returning back to these propulsion gaps to get a new leg started, I think is really what we should be looking at. Pound is probably one of the best ones to trade at the moment because it's weak. New Zealand won't be. So New Zealand filled it, look. Broke a candle. That hasn't filled it, but it has. New Zealand's impossible. US dollar CAD filled it straight away yesterday. So they got the fade. So that one, the fade did work because obviously that was an ADR hit. So yeah, I just don't feel any strength in these CADs. So what I've got on at the moment is CAD Swiss short. I've got that initial position down here. And obviously I rode that down. Added again at the end of yesterday. So I've got these two positions on now, and I will add again when we get back up into that propulsion gap with a view for the Swiss franc to hopefully power up a little bit. But at the minute, I'm not particularly interested in anything CAD unless it's US dollar CAD, because I think the US dollar's got a good chance of pumping. So DAX opening range is in, opening 15-minute. Fairly big range this morning again, 630, so 63 point open. Pulling back inside. So if you took the pre-market break today, or you took the 5-minute, you're short, which I don't think is a bad thing today. So quickly looking at the DAX and where we could potentially be headed today. Obviously, we've got yesterday's low, which is miles away. We had an ADR. The DAX hit ADR yesterday. So we were, what was it? 161 is ADR. We hit ADR, bounced straight off of ADR basically. And then we put in an ADR plus move. We put in a 125, possibly 150 ADR move in the opposite direction. So to get back down to yesterday's low today is a 150 ADR. That's asking a lot. So I don't think we're going to get there. So target today, I would look at potentially ADR, which is this support and this propulsion move. So this was the initial move yesterday, came back up, accumulated. That's your accumulation break, that propulsion gap. So that's where I potentially look for support. Think of the daily. What's going on with the daily? Yeah, we are massively bullish. So if we get down into that propulsion gap, which is here, yeah, what we're going to do is put in a spinning top. Yeah, so every time we push down at the moment, for the last 5 days, we've pushed down, we've rejected. We've opened, pushed down, rejected. We've opened, pushed down, rejected. We've opened, pushed down, rejected. Opened, pushed down, rejected. Today we've opened and push up, rejected. So if we push down, I'm just not sure that we've got enough legs to get back down there. So I would look for a rejection, which is already happening this morning by the looks of things. Might be the day that we get that break. And if that is the case, we're looking at ADR high today. Yeah, which is that double top. So either way, whatever happens today, your targets are ADR. So ADR breakout to the low, ADR breakout to the high. So that's DAX done. ADRs, obviously there isn't any. The weeklies we've looked at yesterday, all of these weeklies are mainly odd based. So pound odd, that's already played out yesterday. You missed it if you needed to get on the reversal alert yesterday on that one. We drawn a new one because new market structure. But yeah, the reversal alert was down there, M15 yesterday. It was there. That was your entry. So that was played out already. Euro odd. Oh, that's Euro CAD. Euro odd, there's your reverse alert yesterday. So that played out yesterday as well. Straight up into propulsion. Again, prime example of propulsion. Accumulation, break, retest, add, drop. Another one there. Accumulation, break, propulsion gap, add, drop. That's an A shape. So yeah, you missed that one yesterday. All happened yesterday, didn't it? Aussie, New Zealand. So I'm short Aussie, New Zealand at the moment. Still. Obviously, I've got out of this. I can't get down to this propulsion gap. This Aussie's not letting me out. So at the moment, I'm waiting for a retest of either that propulsion gap or that propulsion gap. When you get two big propulsion gaps like that, which are caused by the news, you know we're coming back. It's just not at the moment. It's made a new high today and it's just sitting around up there. As soon as we get that Asian break to the downside, we should at least come and test that double bottom. If we test that double bottom, I'll probably break even it, because if you look at it on a higher time frame, what I was expecting isn't what I've got. So I was expecting a market structure break to the highs as being the pullback on that move and starting a new move to the downside. Hence, push down, lower high and drop. Haven't got it. So we've got a new high going in. So the market structure has shifted on this to be more of that now. So we will start a new leg at some point and it will come back into that propulsion gap. It's whether or not we need to get up into this area of resistance. So that will be my add-on up at ADR today, if we get up there. But nicely extended on the 4 hour. And I think we were extended on the hourly. We might be out now. Yeah, we're just out of the hourly extension, but obviously we were very extended on the hourly, which is why I got in. So that's my entry there, was hourly RSI extension. And I got in on the M5 reversal alert, which was in here somewhere. Would have been that one I got in on there. So yeah, I still like it short, but as you can see, all we're doing now for the last 4 sessions is accumulating on that one. So That is extended. So the reason, obviously, I'm talking about this one is because, where are we, Monday? This is now 221 pips on your weekly range. So it's 125% of its weekly range, and it still has not breathed yet. So I would expect some kind of drop on that, which is why I'm short. We've got Aussie Swiss and Aussie CAD. So again, Aussie Swiss, yesterday it made its move. So we got 125 on the weekly range from Monday, sorry, which is here, which is, if you take out this gap candle from there, it's pretty much still a weekly range. It's 166 and it's 135 Aussie Swiss. So it's over its weekly range. But that kind of played out yesterday as well. And it's just kind of flagging at the minute. So we might get a flag break here. So you could drop down M5. Oh, you've already had the reversal alert. So the reversal alert, you've already had it this morning. You're now retesting. So if you want to get into this now, today, and expect another leg down, it's impossible to tell whether these candles are real or not. It's really difficult with the Aussie pairs. But you could stick a pending order because you've missed the reversal alert, you've missed the retest. Stick a pending order underneath that low there. If it breaks back underneath that low there, we've got basically, I think, probably a good shot at targeting these areas down here and potentially here, but obviously long term all the way down. Aussie CAD, again, this one's off the news. So Monday is here. Boom. So we've had a couple of pullbacks on this. So we've had a push, profit take, push, profit take, push, profit take. So this propulsion gap that you can see here, that there, you can hardly see they're different, but that is a different one to this one. Yeah, they just kind of meet up. So this propulsion gap here is part of that V-shaped recovery. Yeah, so I would exclude that. This one has already been tested once. So it's difficult to tell where this is going to pull back to potentially. And we have now broken out, can't see it, of this yearly high. So this is last year's high, which we've now broken out of. So it is off to the races. Obviously, we've had that weakness on the Canadian dollar and we've had that massive strength off the Australian dollar. So news this week has pumped the Aussie off of the CPI figures and it's dumped the CAD off of a positive interest rate. So a little bit confusing movement off of both of these this week. But obviously it's the perfect storm when you've got one pushing and one pulling. We get that stretch. So I still like it for a pullback. The thing that concerns me is we've broken out that yearly high. If this is going to hold, we're going to see an accumulation potentially or some kind of flag form and possibly a break higher. But look how far away you are from the 24 and the 72 moving averages as well. Yeah, when we get that far, that extended, yeah, 4-hour RSI, 4-hour RSI, when we get this far extended, we need to breathe. Yeah, you need to breathe. So I think we've got a pullback coming. It looks like it, doesn't it? I mean, if you look at the, you can only ever look at history and history repeats. Yeah, the further away we get from the 24, the more extended we are, the more RSI has pushed, the less profit takes we've had, the more stretched market is, the faster the ping back happens. So we are very, very stretched on this Aussie CAD. Looking at it from a fundamental perspective on the Aussie, with the new fundamentals, Aussie CAD is completely neutral. Yeah, range bound. So fundamentals are flat. There is no cop bias at all. The market is a short and a short. The only thing we've got is retail long. So we want to be longing this at the moment. That's the only thing really that's giving us any guidance whatsoever to do with this pair, and it says to go long. So we're extended to the upside with potential short setup. Up to you if you want to take it. I mean, there's a very high probability it's going to work. But everything is mispointed, isn't it? Nothing is lining up with this pair. So we're extended on the hourly, just coming out now. M15, you've just had the reversal alert and you've kind of retested. So yeah, it looks like a good short, Aussie CAD. You've got good areas to target to the downside on the 5-minute chart. This area has been tested, but not properly. This area has been tested. But to get back down to here, we've got to put a 125 ADR in today. There's no news that's going to cause that today. So there's your extensions on the RSIs. Nothing particularly exciting there. Aussie CAD you could take, and Aussie New Zealand is the other good one as well. I like Aussie. I mean, obviously this one already. Why did I not get another position there? Is that too close? 32.40. Yeah, it's too close. Right. Let me know if there's any other pairs. Morning, Neo, that you want to have a look at. I'm going to whiz through the bias scorecard and I'm going to whiz through sentiment. I am short on the DAX. So DAX has just broken out to the downside. It's just double bottomed, basically. Limit orders just triggered at the lows. It's not a very good short today. There's not a lot of room, is there? Another big range. So I'm just thinking. Gold. I don't trade gold. Your sentiment on gold is long. So everybody at the moment is shorting gold. So gold will be going up. Wrong one. Oh. Use your charts. So everybody's short gold. Therefore, gold is rising. And yeah, it's a long at the minute. So you need to look for somewhere to get in long. So the market structure on this, obviously, you can see it's very bullish. So anywhere down here, this propulsion gap, any pushes to the downside, any RSI extensions to the downside on the M15 or on the hourly, look for longs. Not quite extended on RSI, but if you get another push down, if you make a new low here, you're going to get RSI extension to the downside. Depends what time frame you're trading. If you're scalping, obviously you want to be looking at low time frames. If you're looking for a longer term entry, higher time frames. But yeah, I'd look for pullbacks basically to jump in long on it at the moment. DAX isn't looking very convincing, is it? Really, this very whippy at the moment, the DAX. That's the most indecision you can get. Look, that is our trading range for deciding on price. So this is all price discovery movement. Wicks are price discovery and failure. Price discovery, failure. Price discovery, failure. Bodies are where we're happy to transact. Look at where we're happy to transact at the moment on the DAX. You can kind of draw it with a pen. It's very, very difficult at the minute, the last couple of days. All the earnings have come out and nobody's interested in the DAX. We're all trading the NASDAQ, which is moving like a nutter. Anyway. Dances with Wolves. Care to explain why go against the flow? Is it retail versus institution thing? Yeah, basically. You go to the website. It's all explained on here. So if you go to the fundamentals and go to, there's two main pages, retail sentiment and commitment of traders. So the retail sentiment shows you what positioning, this is updated hourly. So this is the 8 o'clock update. It's 8:30. So this shows you the positioning of retail. It's all explained how we use this data and why we use it on here. But basically, retail direction is typically wrong for two reasons. Firstly, because they haven't got a clue what they're doing. And secondly, because the market hunts liquidity. So the job of the institutions and banks is to find liquidity in the market to execute orders on behalf of their clients. So, oh no, just move my chart. So the bank's job basically is to, DAX is a bad example, so is to execute euro and US dollar transactions on behalf of its corporate clients. To do that, if it needs to now make a purchase for 250 million US dollars, if it wants to buy euro US dollar, what it needs to do is find somebody to sell to. Okay, so for every transaction in the market, there has to be a buyer and a seller. If I need to now buy $2.5 million worth of euro US dollar, I need people that want to sell 2.5 million of US dollar, euro US dollar. So what I will try and do is place an order in the market and get it executed. And obviously, because I've got such a massive order to place, there's not going to be enough people at this price point. And as you just saw that jump there, that was a big order just going in right there. What will happen is I place an order and it goes boom, and it eats all the orders that are sitting short there, all the stop orders, all the pending orders, everybody's orders. It just eats the whole lot up and goes, thank you very much, I've filled 200 grand, or 200 grand of my 2.5 million order. And it will keep hunting for liquidity in the market. Retail liquidity is in the form of stop losses and pending orders, right? So there'll be a load of orders sitting around the lows, which are pending orders to go long, to buy a double bottom. There will also be a load of orders sitting here, which are sell orders to go short because somebody has placed a buy order and a stop loss. A stop loss on a buy order is a sell order. So there's liquidity sitting at these areas. There's liquidity sitting at these areas because retail and institutions as well that are using speculative trades will have liquidity orders placed in the market. So the job, obviously, of the banks and institutions is to place orders. It doesn't care what price it gets. Whether it gets a price there, or there, when you're placing $2.5 million worth of orders in the market is irrelevant. I want to go and execute these orders somewhere. Best place I possibly can. So if retail is going hard in one direction, we know there's a lot of liquidity sitting there. So if euro US dollar is being bought to death, let's use gold as an example because we know gold. We've just looked at gold, right? So using gold as an example, retail is shorting the crap out of it. Gold. 79% of retail is pressing the sell button, which means that when I here am pressing my sell button, I, as a retail trader or a trader, puts my stop loss here. So the market comes, takes that liquidity, uses it, and then moves the other way. I get short. I put my money there. It comes up and it takes that money. I go short. I put my money there. I go short. I put my money there. It comes up. It takes that money and it takes that money and it pushes back down. I put my stop loss there. It goes short. I put my stop loss there and it takes that money. So if retail is doing that, the market knows if it goes long, it can fill its orders because it knows where that liquidity sits. It can't see your orders, but it knows where it is because that's what everybody does. That's why I don't use stop loss, because I never get hunted by the market. I just make money. And that's what the business and the banks do, the institutions do. Most institutions and banks will not use a stop loss. There's no point, because what you're doing is you're putting liquidity in the market, which is saying, get me out of this position. If the point you put that order in the market to get you out of the position makes you a loss, you have nothing but a guaranteed loss. So don't do it. And that's all covered in the bootcamp on the website. But that's the idea of the contrarian view, if you like, is that if 94% of the market is shorting the Aussie dollar, Canadian dollar, the thing's going to go north, right? If you also have the commitment of traders on your side, which is the futures positioning from large institutions, Speculative, this is the non-commercial data, what's called the non-commercial data. So this is not hedge funds, not pension funds, not anybody that is putting orders into the market on a transactional basis on behalf of clients. This is what's called non-commercial. This is speculative trading. This is finance houses, partly pension funds, but it's people that want to make money on market movement, not doing it because they're hedging a corn transaction just in case there's a flood, right? That's what hedge funds are there for. So this is basically where the big boys who are looking to make money, this is the direction they're going. So if you get on board with these guys and you get on board the other direction that these guys are going in, you've got a good chance, because the commitment of traders guys are the ones with the big pockets that move the market. These guys are the ones with the shallow pockets that put the money in the market that the big boys hunt. So if you look at a combined view of both of them together, that gives you the best directional bias to trade. So all you need now is a signal system to get you in line with this direction. So if you were to pick just the strongest and weakest, there's no strong sells at the moment, but there's 5s and 6s on buys, which I can't select. Let me just clear that a minute. Yeah. So Euro Swiss COT positioning is long, because commitment of traders report says that there is more long positions than short positions. And on the Canadian dollar, there is more short positions than long positions, which means that the market is longing that, shorting that, which means we need to be biased on New Zealand dollar CAD long. Retail, on the other hand, is all shorting New Zealand CAD at the moment, which means we want to do the opposite to them. So we get a +4 score for COT, we get a +2 score for retail, which gives us a +6, which is the maximum possible long. So New Zealand dollar CAD, we want to be opening our charts up and going, right, I need to get in long on this thing. As you can see, I've been longing it for a while. So basically taking every possible long opportunity I can get. It pulls back, I get in long, it goes up. Yeah, because the big institutions, and if you go to the 4-hour chart, you'll see I use what I call the institutional moving averages. So this is the monthly and quarterly moving averages. That's the monthly, that's the quarterly, 24 and the 72. These tell me the direction of the big boys. The market is going this way. Why? Because the big boys drive the market, and this is the way they're going. So these moving averages tell me that if price is above it, they're going long. COT tells me that they're going long. Retail, if they're going the other way, every time we get a pullback, I want to buy it. I want to get on board with the big boys when the idiots, retail, are going the wrong way and putting their money in the market for the big boys to take. Yeah. So that is, in a nutshell, the theory. Obviously, it's not that easy. It doesn't work that way. You can't just go, oh, hang on, this is a +6, I'm going to buy it. You can't just buy it. You can just buy it if you want to. I mean, if you wanted to, you know, you're going to go into some drawdown on it, because you can't time when these moves are going to start. And that's the bit that's impossible. And again, that's all covered in the bootcamp. Timing is not possible in the market. You can't do that because you're not in control of it. You're on the bus. It goes wherever its driver's going. You don't have a choice. So you've just got to get on when you think it's a good spot. So that's what the market reversal alert is there for, is to show me when we have a break in structure, i.e. we have been selling, and now there's been a large amount of buying. So I want to get on now. There's a structure break there, which means there's more sellers than buyers, but I don't want to be a seller. I want to be a buyer. So I'll wait for it to come down here and wait for a reversal alert long, which is an M or a W pattern in this case, which is a market structure break to the upside. And then I'll get in long on that move. And you just keep rinsing and repeating. All the time you have a bias. And then the fundamentals, the key fundamentals, by a scorecard, gives you the big picture of the important fundamental factors that drive currency prices: interest rates, inflation, GDP, and unemployment. And it also pairs that with positioning for the market and for retail to give you an overall score for each individual currency. So both sentiment, don't just filter on that. So you can filter and say, just show me the best buys and the best sells at the moment. And again, then, so we go, right, I want to take a US dollar CAD long. So the strategies that I use are on US dollar CAD, I will be waiting for a pullback on exhaustion. So I will use the RSI to give me an indication of when the market is exhausted to the downside, because remember, I'm looking for buys only. So I will take longs when the RSI is extended down here on the hourly or the 4-hourly chart. So get in here, get in here, get in here, get in here. Yeah. Yeah. But I will get in on a low time frame when we get a reversal alert in the direction that I'm looking to trade, which there isn't one at the moment. But when we get a reversal alert long and the RSI on the higher time frames is extended, that's when I take my entries and I scale into the entries, waiting for the market to move in my direction. That's it. Very simple. And that's kind of why I've built this section on the website, is to make it super simple. What do I want to trade today? Euro CAD and New Zealand dollar CAD long. Not interested in much else because there's nothing else at the moment from a sentiment perspective that's interesting. From a buyer scorecard perspective, there's a lot of stuff that's interesting, and that is the stuff that I'm in, waiting. And all I do is I scale in, and this is all covered in the bootcamp, but I scale into the market, waiting for the move to start from the banks. I don't know when it's going to happen. I get in, hopefully it happens straight away. Virtually all the time it doesn't happen because I can't time the market. No one can. So I just get in and wait. And then when all this gets green enough, I just pop it over there and add it again. And then when that gets green, I'll pop it in here and then I'll add it again. And I keep doing that all the time. The sentiment is on my side on the pairs that I'm looking to trade, and just build a pot of cash. And that essentially is what is covered in the position trading bootcamp. Which is all on the website. So there you go. Does that explain it? Hopefully that was clear as mud. But this is all new, this section. I've always used COT to a certain extent, but I've really built this fundamental side of the website out a lot. And all this data is updated regularly, just to help. But if you go to the website, you'll find these moving averages on the other indicators page, the 24 and the 72. All of that data I've just shown you on here, on here, basically. Not that one, sorry. On the directional bias scorecard, basically. So you will find that when you've got big numbers here, you will find that price will be above or below, usually, the 24 and 72 moving averages. And these act as a buffer. So Euro US dollar, we've had a short signal on that for absolutely ages, right? So I've been shorting this thing for over a year because it's below this 24 and 72 moving averages. So all the stuff I've just explained there, you don't really need to know it all, because these institutional moving averages show you what the big boys are doing. So if you just stay in line with the 24 and the 72 moving averages, you won't go far wrong. What price does when it's got a strong bias, i.e. long US dollar and short the euro, when the market is short the euro and long the US dollar, it will go into a trend. So all you do is you buy pullbacks in the trend, and you keep doing that. And the way you can time your pullbacks is using the relative strength index. So if there's relative strength against the trend, that's when we want to start shorting. If there's relative strength in line with the trend, that's probably where we want to start to get out. But we need a signal to get us in, and that's what the market reverse alerts indicator is. This shows us when this market structure breaks. And after a market structure break, you tend to get a move. but you need to try and stay in line with the overall trend. And euro US dollar at the moment, overall trend is long. And stay away from stuff that's range bound. Yeah, so anything that's not got a strong bias either from a fundamental perspective, a COT perspective, or a retail perspective, or a combination of the three, anything that isn't really good, strong buys or sells at the moment, just steer clear. Or if you see something forming a range, take a range bound trade. Because if there's no strong bias for any reason, i.e. you've got no directional advantage from market participants on retail or institutional level, the fundamentals are mixed because they're both doing well or both doing badly, you're not going to get a lot of movement, are you? When like the US, when the euro was in COVID times, the euro was utterly destroyed. Yeah. Yeah. COVID kicked in, 2020, March. Yeah. So COVID kicked in, we had a flurry. And then it was like, oh my God, we collapsed. Yeah. So through COVID, everybody started to recover, and then it absolutely flew to the downside. So if you'd have looked at those reports, then you would have seen that all of the euro fundamentals, interest rates were negative. Inflation was a negative number. GDP was a negative number. Unemployment was a negative number. Yeah. The US dollar was doing really well because it's the world's currency, and everybody, when they want to put their money somewhere safe, they put it in the stronger currencies. So US dollar had an influx of money coming in. So everything on the US dollar from a fundamental perspective was doing pretty well. So you had plus ones everywhere. COT positioning, the big market participants all were shorting the euro, and they were all long the US dollar. So you had a COT positioning direction of that way, which was a -4. So every time, if you'd have been looking at it, retail started to go long, you short it. That would have been a strategy, but you would have seen all of this, because what you would do is you would just take these shorts. And again, it's all covered in the bootcamp. So at the moment, we want to be buying dips. There's only been 1, 2 there on the 4 hour. But I mean, if you go down to the hourly, you will have had more opportunities to get in. So you'd have been in there, you'd have been in there, you'd have been in there, you'd have been in, might have been in there, but might have been in there, you'd have been in there, you'd have been in there. DAX, not going anywhere at the moment. So we're still within the 15-minute opening range at the minute. We've got no momentum whatsoever this afternoon, this morning even. Nothing else is really moving either. Just flat. Morning, Tom. Danceable. Okay, that sounds a great system. Do you trade in contrarian style with no stop loss? Yeah. There's no winning percentage the way that I trade. Yeah. So ask yourself this question, Dances with Wolves. I don't use a stop loss. In the last 12 days, I've made 5 grand. How many people do you know using a stop loss right now that are profitable? I'll leave you with that question and then go and watch the bootcamp. There's no such thing as a winning percentage. My winning percentage is probably 70%, 80%. I don't know. Doesn't matter. A strike rate, a winning percentage on a system has nothing to do with the system. It has to do with the trader. So Euro US dollar, you are about to get a reversal alert signal short in the next 9 minutes if this candle breaks as it is now, right? So if you hit the short button now, you will place your stop loss there, maybe there, maybe there, right? Each of those is going to give you a completely different strike rate. Yeah, because if this now double tops that, you're fine. If it pushes up and double tops that, you're stopped out. If it sweeps the highs, remember what I've just explained, right, about stop losses, you're going to get stopped out. If you put your stop loss there, you're going to survive and it's going to come back down to here. When it comes back down to here, back to your entry point, you're going to go, oh, thank God, and you're going to close it out. What's your strike rate? Nothing. Yeah. The other trader sitting next to you, right, would have not used a stop or would have put his stop here. When it comes back down to here, what he will do is add another position because it looks like the rejection of the high is worked out, and he will take both positions off there with a 1-to-1 reward ratio. So he has 100% strike rate. Another trader will get in there, put a stop there. It will push up. It won't stop him out. It will come down to here. It will come down to there. He'll put his stop to break even. It will pull back, stop him out, and then it will drop all the way down to the double bottom where he wanted to get out, and it won't be there with him. He will have lost because he got a break for even trade. He was right, but he didn't make any money. Yeah. So you see what I mean? Winning percentages and strike rates, doesn't matter what your system is. I can give you this system verbatim and give you mechanical rules in it. You won't follow them because you are a person and humans are all different. If I give an exact, I'll give you a strategy, right? The opening range breakout, which I trade every day. There's an EA that trades this with set mechanical rules, right? So this is told at the moment to get me in with a risk, whatever that may be, at the 15-minute opening range. And it's told that if I get to 40 points in profit, start trailing my stop loss, If this now hits this level, right, and I see a bounce starting, because I think this is where we're going to bounce today, I will close that position. If I'd have let the mechanical version of the EA carry on, it might do that and stop me out, or it might pull back to there and slam and do 200 ADR. I'll miss $1,000 in profit. Doesn't matter. The strategy strike rate on paper will not play out in the future. Backtesting is great to show you what is the best way to do something, but you will never get those same results because over the last year, when I backtest this EA, it gives me a result. The previous year, it gives me another positive result, but it's a different result to that year. And if I go back another year, I will get another positive result on the strategy. But every single one of these years will have a different profit. Yeah. And that is assuming the EA does everything 100% mechanically and it never misses a trade. It will. Something will go down, your VPS will break, you'll miss one. That will throw out your profit, your strike rate, everything. Yeah, your internet goes down. So you miss that short, which would have stopped out, and you manage to get on the long, which makes you profit. So you miss a stop out trade. That affects this. So your strike rate for a strategy or a system is really irrelevant if you're using a stop loss, because you're never going to get on every single one of those trades. What you need to ask yourself is, am I looking to make money, or am I looking to find a strike rate system? Am I looking to be right? I'm not interested in being right. I don't care if I'm right or wrong. As you can see, I'm wrong on every single one of these trades at the moment, but only temporarily. This is drawdown. This is what your account is for. You use your account to draw down into. That's what it's there for. If I've got a 100K account, I've got a drawdown of 100K. If I'm in a prop firm, I've got a drawdown of 5K or 12K, whatever it is. But the drawdown is there to be drawn down into. That is my balance. That is my working capital. A business, you start a new business up, you get $100,000 worth of investment in your business. You've got $100,000 worth of drawdown you can use to get that business off the ground. Your trading account is drawdown. You use it. I'm not interested in whether I'm 50%, 30%, or 70% strike rate. I'm interested in making 10 to 15% a month. That's what I need to survive and pay the bills. So, everybody's, and this is, like I said earlier about retail, Yeah, everybody is programmed to go, right, you go short here, you put your stop there, whatever that is, you need a minimum of a 1.5 to 1 risk reward. So your TP needs to be there. Yeah, or wherever it is. Why? What on earth makes you think that because you put your stop loss and entered there, right? What on earth makes you think the market is now obligated to move 1.5 in your favor? Got nothing to do with anything. The market is going to go where the liquidity is. And if the liquidity isn't at 1.5 where you put your TP, you'll never get out TP in your life. You know, these people go, I only go for 10 to 1 trades. Good luck. What on earth makes you think it's going down there? This thing's been going up like that for 4 days. Why on earth do you think it's going to do a 10 to 1? So what you'll do is you'll get in, it will go down to there, you'll have $1,500 in profit, you'll move your stop to break even, it'll pop up to there and you'll break even. Well done, you just lost $1,500. Take that, put it in here, and then get in again. If you really think it's going down there, get in again. But don't let the market take your money. It's ludicrous. I did it for nearly 10 years. Did it for nearly a decade. And I actually managed to make money. I became a break-even, slightly profitable trader. And I did do fairly well. But you can't sustain that very easily unless you are super, super, super talented and super disciplined. And there are some people out there that can do it, but not most. This way of trading, the way that I trade, works for virtually everybody because it takes away the one thing you can't control, which is your emotion. The psychology of trading. Very slow going, short on the DAX. Yeah, it's not going anywhere today. We've run out of oomph. But yeah, go and watch the Boocamp, basically. Right. So yeah, I mean, that's obviously that accumulation is where I think we're headed. But we got to break this yet. It's just there's no volume in the market today at all. So we might have a whippy one today, but it might go. But I'm using a 40-point stop. So if it pulls back, God, that was close, wasn't it? It just missed me there. So if it just pull back and stops me out, obviously then I'll just wait and see if we get a rally later on. But I don't have that much hope for this. There's no sellers at the lows at the minute. There's only buyers. They ain't going anywhere. So yeah, there you go. I agree 100% with what I understand about stops. English is not my language, and I understand UK worse than the US. It's the same thing. Can you please shortly repeat the core? How you trade it without stop? It's all in the Boocamp, Tom. So if you go to the Position Trading Bootcamp on the website and just watch this lot. If English isn't your first language, sorry, I can't help you. I haven't got anything translated into different languages because I don't speak them. And this is all free. So I'm not going to spend a load of money on getting somebody to translate it all because I don't charge for it. So if you want to translate it, that'd be great. But everything I do is explained in here. Go and watch it. It's go and watch it, and if you don't agree with it, don't do it. But you know, you have to ask yourself the question: if you've been trading for 3 or 4 years, or however long anybody's been trading, and you're not making money, think about the reason why you're not making money. And it's really, really simple. When you boil it down, the reason you're not making money is because you keep getting stopped out on trades, either because you're wrong or because you're right and you had a tight stop loss. Yeah. So if you're wrong, no problem. Let's see if we're temporarily wrong. Yeah. If you're wrong because you've got a tight stop loss, removing the stop loss removes those losses. So one thing that was drummed into me by one of my mentors when I was doing strategy development with him, and he encouraged me to come up with different strategies and back test them. And what he said was, you take a strategy, yeah, and don't try to improve the strategy. So let's just take a simple RSI. Let's take a simple hourly RSI extension. Yeah, I want to be buying. So this is probably a bad pair, isn't it? So you take a simple RSI extension. Yeah. And basically what he said was, stop trying to look for indicators to pair with an indicator that will make the strategy filtered, more effective, i.e. to increase its strike rate. Start looking for indicators that will filter out the losing trades. Yeah. So instead of looking at, everybody's looking for, how can I find something that's going to be more profitable? Look for things that are going to be less losy, if you see what I mean, right? So when you start down that path, what you soon realize is that there is virtually nothing out there that you can use to make you less losy, because the market will always find the liquidity. That's the market's job. And it doesn't matter how far away you put your stop, the market will find it. The further away you put it, the market will find it. So it dawned on me very quickly that what actually I'm doing is feeding the market with my stops. So if I stop using them and just reduce my risk size by 3/4, what I'll be able to do is not be hunted when they come to find the liquidity, and wait for them to go and find the next batch of liquidity. And if I can get in a couple of times and wait for that market movement to happen, I will just get out when the market is in my favor. Because I found personally, I was right on my direction a lot of the time. I was really good at picking trade direction, as I think most traders are. I was really crap at getting the timing right. So the reason the timing is wrong is because of the stop. Yeah. So if you go, let's say, for example, we are wanting to go long on this pair. If this pushes down here and I say I want to go long, if I've timed it wrong, I lose money. And if it pushes down more and I'm still convinced we're going that way and I get in again, I've timed it wrong, I lose money with a stop. If I just don't use a stop and I've got the direction right, my strike rate goes up to sort of 80 to 90%. So what I need now is to find a way to deal with the ones that go like that. And that's what's called drawdown control. So I just reduce the size of these and wait for that. Because every time it does this, it has to do that, because the market participants, when they sell, have to take a profit. I get out on the profit moves. What I need to do when I'm in a position is make sure that I have, trying to find a position, and just is that I have my break-even point on my position close enough for me to exit the position. We know that average daily range is the average a instrument will move in a day. So as long as I can keep this within this, the chances of me getting out are not far off 100%. Even if I just get out of break even, what have I just done? Removed my losses. When you're looking to make profit in the market, stop trying to make a profitable strategy. Try to find a way to remove your losses, is what I was told. So if I remove the stops, I remove the losses and wait for the market to prove me right. Look at the pound US dollar. I got in to the pound US dollar here. Yeah. Oh, this is a really good example, actually, because it's got drawdown control on it as well. I got into the market here on a reversal alert because it was just extended and we had sentiment on side at the time. We've got cotton on side as well. So I got in there. I was wrong. I timed it totally wrong. The double top that I thought was a double top wasn't a double top. So it accumulated and then pushed against me. So I got in again. Yeah. And the timing was again wrong. I think it was on, actually, the entry was here. That was my entry, I think, there. The timing again was wrong. So what I did was I took a bit of this off. So this was a 0.36, I think. And I reduced that 0.36 down to 0.24. And I took a little bit of a loss on that position. So I've reduced this down. So it means if it goes further against me, I'm not going to lose as much money on that one. As it came down, I added a new position on. Yeah. I took another position there, actually. Yeah, look. And then I took that one off in profit and I added another position on. Then I took a bit of that one off because it went against me again and I added another position on here and I took that one off. So what I've made now is 2 profits and 2 losses, but these 2 losses are only a third of the positions. These 2 profits are all of the positions. So overall, on this move so far in 4 days, I'm positive. I've made money and I'm still in it. Then I had another position there, which I took off as a profit. So I've now made another profit. So there's 3 profits, 2 losses, and the losses are only 1/3 of the positions. And I've still got them on. They're still there. Added it on again. So all I'll keep doing is, as long as I think this thing is that way, because COT is positioned that way, retail is telling me they're all long it, so I want to short it. I've got fundamentals on my side, which are all pointing to the downside. Yeah, I'll keep doing it. I'll keep shorting it because I know that at some point right now, as we're seeing today, this thing is likely to come down. And at any point now, all I've got to do is have a normal daily movement within its average daily range. And I can shut the whole lot out and go, I've fed up with this. I can't be bothered anymore, and walk away with 3 wins and 2 small losses. Right? At any point in that last week, if you were trading pound US dollar, did you get stopped out? And if so, how many times? I haven't been stopped out once. And I've made money. That's the difference between position trading and using a stop loss. I'm constantly banking. If this thing gets up to $200, yeah, I'll put it over here, right? And I can use all of this at any time right now. Like I've made 5 grand. Right now I can just go, screw this, I'm going home, I've had enough. Let's just close it all out. Take this $1,000 loss. I'll just walk away with 4K this month so far. That's the worst thing that can happen right now is I can literally just walk away with 4 grand profit. When you start trading this way, you'll realize the thing that has been holding you back is you not being able to find a strategy that doesn't get stopped out. The reason is because there isn't one, and it's called the Holy Grail, and that's what we're all hunting for, and it doesn't exist. I've been doing this for 15 years. I haven't found it. And believe me, I've spent a lot of money looking for it. So stop trying to find it. Again, I've got a video on the website, which is I like this one. This is one of my best. It's a really old one as well. It's really crap. Really crap. But this one, looking for the Holy Grail indicator or strategy? Sorry to disappoint you. And all it does is it talks about these are really, really good, actually. These 3 videos, they're one of the first ones I did. This one especially. This teaches you a really obvious thing that most people are completely subconsciously unaware of. The fact that you are trying to control something which is totally random and driven by other people that you have no chance of controlling. And yet what you're trying to do is to find a strategy to control this thing, and it can't be done. So what you do is you jump from system to system to system, looking for this thing because you're trying to do that. When what you should be doing is making money, controlling your risk, managing your account. Yeah, those 3 things together are what sparked the Position Trading Bootcamp, which explains that all in much bigger detail. Yeah, so today, if you look at the average daily range on the pound US dollar, Yeah. ADR is an indicator that's used to plot out what the average movement is every day on an instrument. Yeah. So on average, it does something like that. Yeah, that's its average daily range over the last 10 days. It's done something around about that. So all I'm doing is if this pushes up today, I'll get in. If it does that again tomorrow, I'll get in, because I know at some point, and every time I get in, my average is going to go whoop, jump up, whoop, jump up. All I need to do is, and I know for a fact that one day soon, it's going to go like that, and it's going to move down an average daily range. At that point, I've got an exit. Look at a daily chart. Yeah. You have big days up, you have days down, days up, days down, days up, up, down, down, right? So if you'd have scaled into this short here, short here, short here, short here, this thing then went down, down to there, right? Your average on those 4 positions is that. It's actually that. Yeah. So the average of that, and that is in the middle of it all. Yeah. This candlestick went all the way down to there. That would have been, for me, somewhere around about $400 of profit. Or I could have just gone, screw this, I've had enough, and got out with 0. But do I ever get out with a negative 1%? No. Why would you possibly give the market 1% of your hard-earned cash just because you pick the timing and the direction of your trade wrong? Lunacy. And yet we do it every day. Did I just move a stop loss on that position by accident? Yes. There you go. There's a rundown of the position bootcamp. That's the fast version. I guess it comes with experiences. DAX is just pushed off of the highs, but not retracing again. I guess it comes with experience. As with everything in the beginning, you are bound by rules to minimize risks. And as you master and go beyond the rules, which now blind you, rules could be your stop loss, etc. Yeah. I must stop providing liquidity from this moment henceforth. Yeah, you've got to subscribe. Yeah, I mean, the thing you've got to do though, right, is the first thing you've got to do, and again, don't start doing any of this until you've watched the boot camp, because there's stuff you've got to do and you've got to change, right? The first thing is the lot size of your positions. You have to be able to come into your account, right, and go like that. I don't care. If this thing now moves against me up to there, let's say it goes an ADR against me today, I'm going to lose 0.126 of my account. I'm going to lose 0.1 of my account, right? So the first thing you've got to do is adjust your lot size to a lot size that you couldn't give a monkey's about, right? Most people, when they hit that button right now on the hourly chart, they will hit that button, they will put something there that means that they will lose, in this case, because it's a $100,000 account, $1,000. You are gambling on the fact that this will not move up by the distance it did last candle and has done many times over the last day, right? It's 24 candles in a day on an hourly chart. The vast majority of them yesterday went that way. You are betting against the vast majority of yesterday's action that it's not going to go that way, and you're betting $1,000 on it. 1% of your account. When this thing moves down by the same distance, you will have $1,000 in your account in profit. Show me somebody in the world when you put $1,000 in front of them that won't snatch it off the table immediately, and yet you think you can hold for a 3-to-1 reward? Highly unlikely. We're human beings. Someone puts $1,000 in front of me, I'm taking it. Everyone, look at these trades here. Look. Every single one of these trades, virtually all of these trades, you won't find very many in here above $300, above $300. 300, 200, 200, 200, 100, 50, 200, 100, 100, 200, 200, 100, 250, 350, there's a biggie. 100, 100, 350, 500, there's a biggie. Pound New Zealand, that was a good one. Another good one there on the Euro Swiss. Every now and again I get these ones. Do you know why I get these ones? It's either a news event or I'm asleep. And I wake up and go, ooh, Pound New Zealand. That's moved in the Asian session. I'm not around. Oh, I'll take that. Yeah. Another one there. DAX. That was a nice DAX. This is with the ORB. So, you know, the DAX, when the DAX goes, there's literally no reason to get out. So you will get big ones on the opening range breakout strategy. But yeah, look, the 50 quids, $50 here and there, some scale outs. Yeah, you adjust your risk parameters so that you forget about this 1% thing. You can't risk 1% of your account when you're not using a stop loss, because you haven't got a stop loss to calculate the lot size to risk that amount of money. So you get in with something, and what I usually do is I use a lot size where if it moves against me by 2 ADR, so where we are here, 2 ADR is there. So I use a lot size where if it moves 2 ADR against me, I will be in drawdown by 0.25%, $250. So this thing, to get to this point, and don't forget, I'm not going to use a stop, I'm just putting it here to demonstrate, but it's got to move that far against me to risk $250 on a $100,000 account. And when it gets there, what I will do is I will close out a third of it, and I will take a loss of about $70 to $90 to help my average move up a little bit. Because I don't think it's going that way. All I think is the market is probably reaching for a level. So if it was to go up there, for example, I would go, right, well, where are we headed? Oh, we're going up there. We're going up here. That's why. So I'll always look for a reason. And again, this is covered in the Bootcamp, but if it's going to push up to there, I would suspect we're probably looking for that. And if that fails, we're looking for that. So I plan out where we're going, there or there. So I need to measure the distance there. That's 2 ADR away. That's going to be around about 4 ADR. If we get up to there, I'm in real trouble. I'm going to have to start closing these out. And I might take 1, 2, 3% loss on that position if it's really wrong. And it's going to need something pretty fundamentally wrong for it to move that far against me. It's a long way. Look at the average daily range it moves. We're asking it to move 2 ADR. That's going to take days to get there. So, but to get there, it's going to do something like this. Every single one of these is an opportunity for me at my break even to get out of that position. So if I really don't like it, I just get out flat and go, oh, I've had enough. I did this yesterday. What did I close out yesterday? US dollar CAD, didn't I? I was like, I don't like it at the moment. I'm overexposed on the Canadian dollar. We've got Canadian dollar news coming out. So I closed US dollar CAD there with a $37 loss. Yeah, because I just didn't like it. So, you know, it went all the way down here. There's my trade. Look, so I made a profit on that one. So I entered there, I added there, it pushed up, I exited. And then it went accumulation for a day, accumulation for a day. Then we had the news spike, and I was like, do you know what? I don't like it. Look at these highs. It's not getting above it. So I got out. But I didn't take a loss there. I got in there. That's where the stop loss would have been. I would have been stopped out. It would have come down. I'd have seen bullish action. I would have gone, I'll have a stop there because there's a 3-bar reversal there with a hammer. I'll get in there and I'll go long because I think it's coming up here. I'll put my stop there and I'd have got stopped out. Yeah. Then we have a bullish move. I get in again. It pushes up, pushes down, pushes up, pushes down. Doesn't do anything. My stop's under here. They come down, they take out my stop, and then it runs to the place I was going to go to initially. So I've got stopped out, I've got stopped out, I've got stopped out, and what's happened? It's gone the right way. Well, it hasn't yet. It's accumulating, to be fair. But that's what we do. That's not what I do. Because I don't give it to the market. I don't let them have my money unless I'm really wrong. And then I will give them my money. And the EA that I run, the Market Reverse Alerts EA, this manages the whole thing for me. So I don't have to do anything. I basically pick the pair, stick the EA on it, and I don't do anything. It does the whole lot. It puts my entries in, it does the drawdown control, it scales the positions in, it puts them the right distance apart, it waits for market structure reversal so it only gets in on strength. It does everything for me. But I still manage every position myself. I'm watching this like a hawk because it doesn't know. It's a machine. It doesn't know what my P&L is. It doesn't know what I've got in drawdown. It doesn't know that I'm worried about pound US dollar because it's in I'm not worried about it because it's not anywhere near where I'd get worried. But if that was in 1.5% drawdown, for example, it doesn't know that I'm worried about that. So I might manually scale out some, or I might take something off the table faster and use all the profit from that to pay for that. Again, drawdown control is all covered in the bootcamp, but it's just a totally different way of trading. And dollar averaging is a very well-known term in trading. Virtually every pension fund, hedge fund, and institution out there uses dollar averaging to scale in and scale out of their positions. If you go into a bank and you go and work for a bank, they won't call you a trader. Well, they will call you a trader, but they will ask you, what's your portfolio looking like? What are your positions? Positions, plural. Not, have you got a trade on pound US dollar short and where's your stop loss? How many positions have you got on the pound US dollar short? Because the fundamentals are pointing downwards. Your scorecard says you shouldn't be doing longs. How many positions have you got on? They're position traders. They all do the same thing in the institutions. You just need to scale it back for your budget with whatever money you've got available to play with. New Zealand dollar, look at this one. This is another good example. Going off on one this morning, aren't we? It's because the market's crap. It's not doing anything. Nothing else to talk about, is there? Look at this, pound New Zealand. Yeah, I have got a stop loss on this one, right? But you can see the reason for the trade. Yeah. Let's go to the hourly. You'll see it clearer. Propulsion move on yen intervention. I think it was yen intervention. We pushed back up into it, dropped. We came back up, retested it, dropped. We came back up, retested it, dropped. We came back up to it. I went short. Right? And I've been short on this since Tuesday this week. So I got in here. If I'd have put a stop loss in, I'd have been taken out on the same day. Right? But I didn't. In fact, I have got a stop on this one. The only reason I've got a stop on it was because of the CPI figures coming out for New Zealand dollar. So I didn't want to take a risk on it. But basically, all it's done since I got into that trade is go sideways for a day and then have a little bit of a dip, go sideways, and now we're having a little bit of a push today. So I'm not doing anything with this trade. It hasn't got far enough for me to take a profit, and it hasn't gone far enough for me to take a loss. I'm just sitting in it. But I've got a risk on it at the moment of $150 odd on a 100K account. So does that bother me? If this thing spikes up and knocks me out, I couldn't give a monkey's. It's 0.15 of my account. Everybody in retail trading courses teaches you to risk 0.5%, 1%, 2% on that trade. If that thing stops you out at 2%, yeah, it's going to make you cross. What happens when you get cross? You go, I'm going to get my money back. Next time this thing pushes down, I'm going to get in again. I'm going to get in with 2%. I'm going to use a tighter stop this time. So if I can use a bigger lot size and it stops you out. Now you've lost 4% of your account. It's quite hard to get that back. 4% of your account. So what's going to happen now is you're going to take another short and you're going to use the same risk and it's going to move down 2% in your favor. And you're going to go, I'm out. I've cancelled that off. So I've only lost 2% on those 3 trades. So what are you? 2% behind. Still cross, still got to get on it. What happens to this thing? It goes boom, 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 boom. Moves down 8%. And you go, oh my God, if I hadn't have taken that off, I'd have made 8%. I would have got my 4% loss back and made 4%. What's that do? Make you cross. Everything in this industry is designed to make you angry. When you get angry, you over leverage. When you over leverage, you blow your account. If you don't do that, you won't get angry, you won't over leverage, you won't blow your accounts. And all you'll do is you'll wait for the market movement, market structure, to get you into and out of positions. It's the ebb and flow of the market. And that's all you need to do is ride the ebb and flow of the market. It flows up, it flows down, it flows up, flows down, flows up, flows down, flows up, flows down. So all we're doing is we're getting in when, in this particular case on New Zealand, we're getting in short when it flows up and we're getting out when it flows down. If we miss our exit, we get in again on the next ebb and then we get out on the next down. We get in when it goes down. If we get in there and we're too soon, we need to get in there and there. That's fine. Our average is there. So we wait for it to push up and then we can get out there with no loss. You just keep doing that. But you will get instances where you will get absolutely steamrollered, as I did with the Aussie New Zealand before Christmas. I got in long here. I wasn't paying attention to the fundamentals, which pointed actually should be doing nothing but shorting it. I got in expecting a 72 bounce. Why? Because we've had a 72 bounces for the last year. That's why I got in long. What happened? It absolutely collapsed. Oh, can't use buttons. Absolutely collapsed. So I got in again, I got in again, I got in again. I had an exit there in a profit and I didn't take it. I took a portion off and I did a bit of drawdown control. And then I just got steamrollered. I got out down here with a loss. It's about an 8% loss on this one position. But that doesn't matter because I made over 100 and something percent in the year. Every now and again, you'll get caught in one of those. 2 or 3 times a year, you'll just get stuck in one and you can't get out. And you just manage it. You just scale out the position and you just accept the loss. But how would you like to lose 1 to 3 times a year instead of 1 to 3 times an hour, which is what everybody does because all they're doing is trading the M5 chart with 1% trying to make a fortune? Not possible. It is possible. There are people out there that do it. But they're highly experienced traders that have been trading for 15, 20 years. I'm just trying to give people an option to do it in a different way. That's all. Anywho, liquidity is the ability to transact size without moving price in direction. No, liquidity is orders in the market. Diamond, or in the case of GU, it flows up and it flows up. Yeah. Yeah, I mean, we've got very weird markets at the moment, haven't we? That's a good example of a squeeze. So that was last year, wasn't it? And again, this is, it depends where you get in and how far you get in. And this is the thing that kills everybody, is getting in too fast, too soon, which is why the EA is the thing you should use and not use manuals. Because if you use the EA will only get you in a distance apart. If it's not the right time to get in, it won't get you in, and that will save you. When I get into trouble is usually when I'm getting in too quick, as you know. So yeah, if you got in there short, you had another short to get out at a break even, but this thing would have never given you a profit. And that's the trouble, is we want a profit, don't we? So you would have got stuck. You would have still been stuck. You'd have still been stuck. You'd have still been stuck. You'd have been out. But that lasted, and this is a squeeze, and again, all covered in the bootcamp, as Jarmond will know. This is all covered in the bootcamp, but that was from the 9th of November to the 5th of January. So that was a 2-month squeeze. Pressure came off mid-December. But that you would have taken a loss on that one. now you can do. Just about to get a reversal alert on the hourly on pound US dollar. M15, we've had one. So again, my little 0.1 I've just added in, you know, that's just a manual trade, but I'll take that off down here somewhere. You know, that's the key to position trading, is to start with a lot size that you couldn't care about and just prove the concept. That's the thing that you need to start with. Do it on demo. It doesn't matter what account size you choose, but try and choose an account size that is similar to what you're going to trade with, and make sure that, you know, if someone says to you, you need to take a trade today, you can go, all right, well, I'll go, let's try and find something. Euro CAD. So Euro CAD, I'm going to short it. And you go like that. Couldn't care less what happens. Couldn't care less. That's going to make me $30. If it moves 2 ADR away from me, it's going to lose me $136. Yeah. But sit in this thing, and this thing will either do one of two things now, and there's a 50-50 chance now I've hit that button of one of those two things happening, and that's an important thing to understand. The odds when you hit the button are the same every time you hit the button. It's either going up or it's down, and it's moving through time. Those are the only three constants of trading. So it's either going to go up to there, and I'm going to go into drawdown by approximately $25, $30, or it's going to go down and it's going to hit my target. That's what's going to happen next. I don't know what's going to happen next, but my options are now with this trade to look at where we're going. So we're at all-time highs. So this is probably not a good option. It's not a good trade to be taking. Oh, not all-time highs, we're at recent highs. So from here, if it's going to push higher, we're going to need to find some resistances somewhere to get into more trades. So I will wait until it moves roughly half an ADR to an ADR against me, and I'll add another position. Yeah. So we scale in. So if it goes up to there, add a position. If I add a position here, my average of the two positions moves to there. So now all I need is a 50 pip move on a pair that moves 100 on average in a day to get out of that position. Not lost anything. Worst case scenario, it's costing me about $70. That's it. That's the key. You got to get rid of that worry. If you're, and again, this was something that was taught to me ages ago. If when you hit that button, you're worried, you're over leveraged. If you're scared to hit the button, you're over leveraged. If you're scared when you have hit the button, you're over leveraged. If when you hit the button, you couldn't care, your risk is low enough that you're probably going to do all right in the trade. But you're not going to do all right if you use a stop loss, obviously, because of the highly probability of getting stopped out. But leverage is key. Over leveraging is massively important. Just lost 149 now. Nothing's going anywhere, so I'm going to call it a day. This is awful. Not moving. I'm just padding. So the DAX is not moving anywhere today. We literally, so the only opportunity for making money today you had was on the pre-market. You would have taken a stop and you'd have taken a very nice little profit on the short. If you'd have taken the 5 minute today, you're pretty much in the same position as me. You're in profit by that much, which is nothing. So it's not very good today at all. We'll have to wait for the NASDAQ this afternoon. So be aware of this afternoon, the GDP figures for the US dollar. Again, GDP is a leading indicator. It is one of the main things that we look at for scorecarding. Institutions look at for scorecarding. So GDP is important. Gross domestic product of a country helps with the currency. So if the currency is buoyant, business is buoyant, that attracts business. Attracting business attracts money. Money makes money. Therefore, currencies tend to rise. So also helps with bringing inflation down. It helps with employment. Employment, again, is something that reduces pressures on interest rates. So it's all positive. DAX has just broken the lows. We may have a move starting, finally. So we'll see if we can get that pop to hold. We've got some sellers coming in, finally. I'll keep you updated on this one in the Telegram group, obviously. But yeah. I'm just going to draw that on, actually. Somewhere around there. It's basically ADR. So this area here that I highlighted previously, and ADR. These targets. So it's not particularly good today. Ladder, pre-market only if you close it already. Yeah, you would. Yeah, pre-market you would have closed it fairly quick. Still sitting there watching it do its stuff. Those pre-market ones, I'm going to run some more tests on this when I get a chance in the strategy tester. But these pre-markets, I haven't actually. I don't think with the pre-market. Or did I? Hang on. Where's my? Hold on. Let me find my back testing. Market reversal alerts. No opening range breakout. ORB. Oh, which file was it in? Did I retest? Didn't retest the pre-markets. Let me just open this a minute. Because one thing I don't think I tested was a scalping strategy with the pre-market. Yeah, I didn't. So there's a good test you can run. If you take the DAX 6, the 15-minute pre-market, and retest this, but retest it using a TP. So just a single trade on either the 15-minute, I would also test the 5-minute separately, and use a TP and range your TPs from 1 to 1, probably 150, and 200. So be a 1 to 1, 1.5 to 1, and a 2 to 1. Because if you look at today, if you took that 15-minute ORB today, pre-market 15-minute, which is that, and you're using 110 stop, added a second position short. I've got it set to add when we go 10 points in profit. Your stop's there, look. So the actual 1-to-1 risk reward to make $500 or whatever is only there. 1.5 to 1 is only there. 2 to 1 is only about there. You made 1 to 1, 1.5 to 1 pretty much in one candle, and you made 2 to 1 easy in 2 candles. So I think with this pre-market, because we're trading the volatility of the first 5-minute candle, if you get 2 candles in the same direction on the opening range break, closing in the same direction, I don't think it's difficult to get a 2 to 1 on it. The question is, how many stop outs would you get? Because obviously there was a stop out there. So you've got to use a positive risk reward on it. But if you had a 1.5 to 1 risk reward, and this blows in the face of everything I've just said this morning, by the way. This opening range breakout strategy is a completely different thing. It's not position trading. It's a totally different strategy, which does have an edge. One of the very few that does have an edge with a stop loss. Yeah, if you use that, obviously with a 50% strike rate or more, you've got the edge there, haven't you? So I might retest that, because all I did with the 15-minute pre was I tested it without stops and using trailing distances. I used different trailers and different break evens. I didn't use anything else. So I didn't use the filters for opening range size. I didn't use any TPs of any description. And I didn't test it on just one of those. So using the 5 minute and using the 15 minute. I think you need to test them both separately and see what the advantage is on both of those. But there's definitely an edge there on that initial break. A lot of days, I think. So there's your 15 pre yesterday, high and low. Yeah. So the 15 pre high, let's measure it. So your risk on it would have been 15. You got 25. There's a 1.5 to 1 there, easy, isn't there, on that initial candle? And then it came back down and took your 15-minute pre short, only gave you 9, and then stopped you out. And obviously, then if you'd had it set to retake multiples, but you wouldn't have got that because you're using a TP. You'd have got 2 to 1 or 1.5 to 1. But what you'd have had is 1.5 to 1 win, a stop out, a 1.5 to 1 win. So you'd have taken 4 trades on that opening range. Yeah. You'd have had 2 losers, 2 winners, and a 1.5 to 1 risk reward, which equals a 1 hour profit. Happy days. But you need to stop trading. So you would need to set a profit target to stop trading on it when you hit, I reckon, a 1 hour reward. So probably a 1%. Make 1% on your account, stop. So I think there's some testing to be done on that. Again, I just don't have the time to do all of this, so too busy trading. So, and I've got so much other stuff on my list at the moment. But anywho, if someone wants to test that, that would be lovely. Right, that's it for today. I'll be back this afternoon at 2:20, same time for the New York session. We'll look at the NASDAQ, trade the NASDAQ. We'll see how the DAX ORB got on. I will post the result of this morning if it's profitable. If it's not profitable, I won't bother. Yeah, I mean, it's either going to go or it's not from here. I'm not very convinced by the power of this morning. But yeah, we'll see how that one gets on. Everything else today is just sitting sideways. So just be careful. Today, it seems like the market's waiting for GDP to come out. That comes out an hour before market. So we're going to have a lot of pre-market movement on the stock indices, which might make those a bit whippy and tricky this afternoon. So we'll see what happens. But there's nothing else that I want to get into at the moment. I'm in everything that I want to be in line with the biases I want to be in line with, and just waiting for stuff to move, really. Okay, so have a good morning. I'll be back 2:20 this afternoon. If you can't make this afternoon, I'll be back tomorrow morning, 7:50, same time as usual, and do the same stuff. And if you need anything, I will be in the Telegram group. All right, have a good morning. I will see you hopefully later.